Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte. We're coming into the final minutes of the trading day here on this Friday, February 7th. And before we get into the charts, I'd like to first point out that we use a 7-point trading checklist. So as you watch me go through the charts, you'll know that I look at the type of candle, I determine whether or not that's bullish or bearish, and then I go right down the line analyzing volume. I look at the price as it relates to the moving averages. I look for gaps. I look at the oscillators down here, the stochastic and the CCI. And I also look at role reversals. That is a concept that I've been talking about for a good long time, and I'll show you what that means when we get to the charts. Before we get into DIA, I'd like to just talk a little bit about what we're seeing this week. U.S. job construction openings are falling as if this was a recession. And so the construction job openings have declined by over 250,000 in 12 months to just 165,000, which is the lowest reading that we have here in the last 8 years. And usually when you see drops like this, it's during a recession. So I believe we are already in a recession. You can see the gray shaded areas here denotes where that lies on the calendar down here. And this is a dramatic drop in construction job openings. So it's telling us, as a leading indicator, it's telling us that the economy is definitely weakening. Now, the net savings as a percentage of gross national income is about to go negative. And between 1929 and 1932, the national income fell by 50%. But the business savings went negative in 1930 and stayed that way until 1935. And look down below here, you can see that that is a pivot lower. So keep an eye on that. We've been talking about the amount of debt that people have been taking on, including businesses. We've been looking at the default rate and how people are defaulting on a lot of these credit cards. We've been looking over the months at car payments and how people are defaulting on that as well. So the signals are still looking very bearish for the overall market. And I often get questions from the viewers on YouTube, why are you so bearish all the time? Well, I'm not. Historically, if you go back and look at my reports, I'm not a perma bear. That's just the way I see the charts and the data as it's coming out. You can see here, obviously, you cannot ignore this, that savings are going negative and people are running out of money in the banks. Right, so that's not positive at all. Now, there's a lot of news coming out on gold and silver. Keep an eye on this because gold deliveries to COMEX vaults is now at an unprecedented panic level. And I was a member of COMEX for 10 years. I was the chairman of the Option Floor Trading Committee. So this is very important information to keep an eye on this because eventually if there's not enough gold to more or less satisfy the delivery notices on COMEX, there's going to be big trouble. And you talk about a squeeze, this could be something we haven't ever seen as far as a short squeeze in silver and gold, both. Taking a look at physical assets and what we're seeing here, this includes gold, it includes jewelry, it includes coins, and you can see how they've compiled this information. This has gone vertical right here. So people are not just stacking their silver bars, they're collecting all kinds of assets related to gold and jewelry and such. So this is going to be very, very interesting. Now let's get to the markets. We have about a minute and a half before we close. And you can see here, this is a pretty big red candle on DIA. And if you look at the pivot point here, we have a lower high and a lower low. We still have gaps below the market here on DIA. And if you look down below, we have an increase in volume on the way down. I talked about that last week, how volume relates to price and how volume is more or less the force behind the move. So we are seeing an increase in volume on the way down, which tells us the sellers are motivated. It looks to me, again, we're coming into the final seconds of the market here. It looks to me like we're going to close right on that low. Take a look at that. We're just pennies off the overall low from today, and that's just happening right across the board in every market. So my downside target on DIA is still in place. It's the same as what I reported on Wednesday at 425.51. And if we look at IWM, you're going to see a similar candle, big red candle, increase in volume. We crossed down below the momentum line down there on the CCIs and magnify that for you. And here we are coming into the final 5 seconds. My downside target right there is still at 220.23. And there is the closing bell, again, for this Friday, February 7th. Again, downside target is right there at 220.23. This is a full-fledged pivot point right here, lower high, lower low. And the lesson for this week, remember last week was talking about volume. The lesson for this week is the size of the candle. As the candle gets longer on the way down, it's telling us that the sellers are becoming more motivated. If we get a big red candle on Monday, we have a lot of news coming out, mainly driven by the continued escalation of the trade war. Donald Trump has announced that he's going to announce continued retaliatory tariffs. And so that's more or less going to shake up the markets, and some are seeing that as inflationary, but we'll get to that next week when the announcement is finally made. But remember, the longer the candle on the way down, the more motivated the sellers are. And when you have an increase in volume on the way down with that longer candle, that confirms that the sellers are very motivated. So down below, again, look at that cross below the momentum line. When that crosses, we generally get 2 to 4 days of momentum in the direction of that cross. That's IWM. Looking at QQQ, we're going to have the same story. Big red candle. However, on this candle, we have a bearish engulfing candle. We talk about that quite often. A bearish engulfing candle is when you have a long body red candle that engulfs the previous green candle. And we saw one back here as well. That was a big, massive bearish engulfing candle. Look what happened. It continued much lower. Bearish engulfing candles are related to bearish haramis. We see that right there. And what happened after that bearish harami? Well, obviously the market dropped after that. So keep an eye on that, because these are the technical signals that we look at each and every week. Downside target on QQQ right there is at that dotted line of 510.16. I said that we would most likely revisit that low, and that's why I changed that to a dotted line. We've hit that a couple of times, and I believe we're going to do that again. Look at that increase in volume. But not only is that a bearish engulfing candle, it's breaking up all this green, which is a stale green light. Remember, I talk about volume. As the volume is decreasing on the way up, you see how that's happening? We had higher highs back here right up until yesterday. The volume was dropping on the way up. That's taken as a bearish signal. So last week, go back and revisit that video. Volume is absolutely a leading indicator, and it was shouting out to us this week as the volume was dropping. So this bearish engulfing candle does not surprise me one bit. Looking at SPY, that's the S&P 500 ETF. You see another bearish engulfing candle right there on an increase in volume. Look down below. We're now down below the zero line. See that little blue bubble off to the right, 0.5872 in the negative? That means we've crossed down below the zero line. So again, expect 2 to 4 more days of downside momentum. We've already hit this downside target here, but I think we're going to revisit that. And again, I mentioned that on the midweek report on Wednesday. Looking at the VIX, came very close to getting a perfect forecast on this on Wednesday. Again, if you recall, here's Wednesday, this red candle right here. I said that there was a good chance we would see a green candle show up, and I thought that would show up yesterday. And in the afternoon, it was green, and at one point it was showing a bullish harami. Then towards the end of the day it sold off. But guess what? Today we have a bullish engulfing candle opposite of a bearish engulfing. But again, remember, the VIX for the most part is inversely related to the S&P. So if we're getting a bearish engulfing on the S&P, it makes sense to see a bullish engulfing candle here. Remember, we had a bullish engulfing candle back here. After that, we gapped up. And so this is something that I do expect we're going to see higher prices on the VIX moving forward. Now, I have a pretty aggressive target up here on the VIX that I am actually keeping, and that's up there at $27. So keep in mind, we're under $17 right now. That would be a big move. For those who are trading UVXY and VXX, especially the members that we have that participated in the rapid fire session on Wednesday, I did a two-part forecast on VXX and UVXY, and we've already hit the downside target from that forecast. Now I'm looking for the upside targets to hit. So we have a nice surprise for you next week. I'm going to be interviewing Jackson. He's 6-year-old Jackson. I'm not going to mention last names, but you're going to be very, very impressed with what this 6-year-old knows about charting. His father, Tim, has been giving him some instructions, and he has cue cards that he's been using with Jackson to teach him, and we're going to make that available as a fundraiser for children's organizations. And so stay tuned for that. I'll make the announcement when we are ready to get those out to the general public. But things are going very well. We have a very high percentage of success so far for 2025, and I do expect we're going to see a lot more success down the road. We hit the 12,000 subscriber mark. Thank you so much. Please continue to like and subscribe. And in the comment field, let me know where you're watching this from. What state or what country are you dialing in from here on YouTube? I'd love to know, to see what kind of audience we have around the world. I know we had a couple of people calling in from Japan on Wednesday for the rapid fire session, but it's always nice to know who's watching and from where. So thank you so much, folks. Have a great weekend, and I'll talk to you on the next video. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.